At the very center of this whole AI revolution, there's one single company that has become the engine for, well, pretty much everything. And right now, Wall Street is making a massive $1.7 trillion bet that its total dominance is really only just getting started. So today, we're going to break down exactly why analysts are basically tripping over themselves to upgrade Taiwan Semiconductor, or as you probably know it, TSMC. You know what? Let's just cut to the chase and start with the conclusion. This number right here, 2,280 Taiwan dollars, is the brand new highest price target on Wall Street for TSMC, coming from Nomura. This just signals an incredible level of conviction. So what on earth is the logic behind a call this bold? Let's get into it. This quote from JP Morgan really says it all. The entire bull case, the reason everyone's so excited, it boils down to one simple, incredibly powerful idea. AI has a bottomless appetite for advanced computer chips, and TSMC is pretty much the only restaurant in town that can cook them. Okay, so that's the big headline. Now, for the rest of this breakdown, we're going to dig into the evidence behind that conviction, piece by piece, starting with the main driver of this whole thing. This brings us to the why. Why all the excitement? Well, the fundamental reason is this explosive, almost structural shift in demand that's coming from AI data centers. Analysts are convinced this isn't just another boom and bust tech cycle. This is a whole new ballgame. And you really got to understand, this is the key. It's not seen as some temporary spike. Wall Street believes AI is pushing TSMC into a completely new phase of long-term growth that just shatters the old cyclical nature of the chip industry. And this chart just shows you how wild that shift really is. Right now, in 2024, AI for data centers makes up a decent chunk of their revenue, somewhere in the mid-teens. But look at the forecast for 2029. JP Morgan sees it exploding to over 40% of their entire business. AI is literally taking over the company. And the speed of this growth, it's just mind-boggling. To reflect this new reality, JP Morgan just jacked up its forecast for TSMC's data center AI revenue to a 57% compound annual growth rate all the way through 2029. I mean, that kind of sustained growth for a company this massive is just almost unheard of.
So that's the why. The demand is absolutely insane. But how is TSMC the one to capture all of it? Well, that brings us to their technological moat, which is really built on two pillars that give them this almost monopolistic power.
This chart just lays out the stark reality of the situation. I mean, look at this. In the third quarter of 2024, TSMC controlled almost 2/3 of the entire global chip-making market. Its closest competitor, Samsung, barely cracking single digits. This isn't even a competition anymore. It's just pure dominance. Now, this kind of market share doesn't happen by accident. It's built on being the absolute best in the world at two very specific, very difficult things that are both crucial for AI. First, making the most advanced chips on the planet. We're talking about impossibly small 2-nanometer tech. And second, putting them all together into super chips using a special technique. And that second pillar, this thing called CoWoS, is a total game changer. Just think of it as the high-tech assembly line for AI chips. It's the magic that lets companies like NVIDIA take their powerful GPU, surround it with super fast memory, and basically glue it all together to create the processors that power things like ChatGPT. For the longest time, this was the single biggest bottleneck in the AI supply chain. But now, TSMC is on a mission to absolutely smash that bottleneck. Just look at this explosive growth in their CoWoS capacity. They're going from around 40,000 wafers a month in 2024 to a projected 110,000 by the end of 2026. This shows you they see a tidal wave of demand coming, and they are spending whatever it takes to be ready. Okay, so we've got the demand, we've got the tech. But here's the real proof. Let's look at the hard numbers that show TSMC isn't just listening to rosy forecasts. They are betting tens of billions of their own money that this AI future is real. $52 to $56 billion. Let that sink in for a second. That's TSMC's capital spending plan for 2026 alone. A company just doesn't commit that kind of cash on a hunch. This is them putting their money where their mouth is, betting the farm that this AI demand is real and it's here to stay. For an analyst, this is the ultimate signal of confidence. And what's the payoff for that massive investment? Well, TSMC is now forecasting that its revenue, measured in US dollars, is going to jump by around 30% in 2026. For a company of this size and scale, that kind of growth is just absolutely phenomenal. And it's not a one-time thing. The company also officially raised its long-term revenue growth forecast for the whole period from 2024 all the way out to 2029 to over 25% a year. That signals years of sustained high-level growth ahead, all powered by the AI engine. By the way, if you're finding this breakdown valuable, could you do me a quick favor and just tap that like button and subscribe to the Stock Market Mojo channel? We break down the biggest stories moving the markets just like this every single week. So what's the bottom line here? What does all this mean for you as an investor? Let's quickly sum up the bull case and then, just as important, take a clear look at the potential risks. All right, so the bull case is just incredibly strong. You've got what analysts are calling seemingly bottomless demand from AI. You have an unbeatable technology moat in both making the chips and packaging them. That gives them huge pricing power, and of course, their own massive spending signals that they are supremely confident in their own future. But no investment is a sure thing, right? There are always risks to keep an eye on. The company itself has said that building these new factories overseas is going to be a little less profitable. They call it gross margin dilution by about 2 to 4%. Also, all that expensive new gear wears out, which is a cost called depreciation, and that'll hit profits too. And of course, you can't ignore the geopolitical situation surrounding Taiwan, which really brings us to the final massive question here. When you step back and think about it, TSMC makes over 90% of the world's most advanced chips. They're like a public utility for the entire digital world. So with a near monopoly on the very silicon that's building our AI future, you have to ask, is TSMC now the single most important company on planet Earth? That's a question the market will be deciding for years to come. To make sure you don't miss our next deep dive into the companies that are shaping our future, be sure to subscribe to the Stock Market Mojo YouTube channel. Thanks for watching.